Hello, I'm Michael Glass from the FXcast Market Analysis team. This is our FXcast Market Analysis trading plan. In each of our videos, we try to identify high probability trading setups. We'll evaluate the gold chart to see if there's any leading sentiment. We will create a low volatility watch list, an inside bar watch list, and we'll review the economic calendar to see if there are any releases that could affect our open and new trades. As always, please send your comments and feedback to analysis@fxcast.com. We are starting off with our daily chart of gold as usual, and we can see the flight of gold. Now, one thing we said was to watch the consolidation that we had in here. We said to watch the wicks that we had in here. Some of my lines seem to have disappeared, so I got to draw them back in. We said to watch this as it was pulling back at support, and then the other thing obviously was to watch if we were able to break above. So not only did we break above, but we got right above the wicks and took off. This was the flight to safety, and you can see it's continuing on in our new session as the S&P downgraded the U.S. debt, the U.S. dollar is being crushed, and the flight to safety actually was in the U.S. Treasuries and into gold. So we can see this beautiful gap up. We not only did we hold it, but now we're moving even higher. So now, as we look at this and see that the market is holding the gap up and we're moving higher, and we can see that we are a little bit overbought here, but we can also see the strong presence of buying volume here. And again, we are continuing to move higher into the new session. So strong gold, what does that mean for the dollar? And more importantly, the pound. And this is going to be a little bit different because it's not just the weakness of the dollar, but it's the weakness of debt. You know, the U.S. dollar, the Eurozone, the pound, there's weakness across the board. And so, again, even though the U.S. Debt was downgraded, the flight to safety in treasuries and gold, the U.S. treasuries were still a good place to go. So what we talked about yesterday and what we've been talking about is this resistance at 1.64. And once again, it's held up. Sure, we wicked up again, but the sellers have said this is value, and it moved us right on down. So when we look at our picture, we can see we're still in a neutral zone. However, now we're below our long-term moving average. And we can see that the dollar took control in this pair, where we can see that the pound was really going sideways and dropped off, and the dollar made a move higher and then leveled off. So as long as the dollar is in control, we can watch this pair continue to move lower. However, remember the other thing that we said, and that is this 1.6245 price level. Each time buyers found value for the past 2 weeks, it's not this big range anymore, it's this narrow range, and the buyers continue to find value in this 1.625, 1.624 price level. So it's going to be interesting to see, will we finally break this 20 and 50 moving average to get back down to the bottom, or once again, buyers finding value, are they going to push us higher? Now, the euro dollar is much weaker. We can see that the euro dollar just gapped down. Now, it's great that it rallied all the way back up, but look at that gap down. But also, as we look at that gap down, we can see that what happened here July 11th, July 12th, is exactly where we gapped down and tested, and the buyers have brought us right back. So this clearly is also a very good price level to watch as far as where buyers are definitely finding value. So we certainly have a wide range here, and this was a wild ride all the way back up, and now we have an inside bar because of what's going on with today. But be interested to see if this moves higher. We can see that we are in the neutral zone, however, we're below our long-term moving average. And fractionally, we can say that the dollar is in control, but they're both above zero, and they were both moving higher. What happened right now is that we can see the dollar moved up a little bit while the euro moved down, which would probably move this pair lower. So that's probably why you're seeing this in the end, you're seeing this move lower. Why the euro couldn't hold that is because the dollar took control. Finally, we're looking at the dollar franc. And of course, with the downgrade of the dollar, that means the franc's going to be in control, so we pushed even lower. And here's something. Look at this chart. There's the dollar franc. Now go back to the gold daily chart, and they're pretty much exact opposites. So, the franc is in control. We remain in the buy zone. We remain well below our long-term moving average. This is one of those things where you short rallies until proven wrong. You can see the spike up in the franc right here, and so that we may see us retest the low from Monday. As we move to our watch list, for our low volatility watch list, we currently do not have any candidates in for our inside bar watch list. Certainly on a day as volatile as this, we're not going to have any candidates for low volatility or our inside bar watch list. Let's go to the economic calendar. As we look at the economic calendar, we can see some industrial production throughout the pound. But the big thing is going to be Bernanke, the FOMC rate decision for the states. See if there's any reaction to the the day that was Monday in trading. So the FOMC will have a chance to speak towards the validity of the U.S. and speak against the S&P downgrade. So we'll see what happens. We would like to thank you for watching our FXcast market analysis. As we continue to improve and make adjustments so that you're getting value from our videos, we want you to take the time to give us feedback, give us comments, send us questions about what you would like to see in our videos, and you can send those comments and feedbacks to analysis@fxcast.com, or you can post to our daily forum. Thanks, guys, and I'll see you next time.